Welcome traders to our start of week technical analysis video. Jumping straight into things here. As you know, this blue vertical line is where we were left off in our last technical analysis video. And as you know, the distance between our end of week and start of week technical analysis isn't by much. Therefore, we won't have that much information to go over. And we're currently on our hour one. So what we're going to go ahead and do is go down to our minute 15 candlesticks and have a look in a little bit more look into detail as we have more information and more candlesticks. So as you understand, we actually had a NFP news event that took place just on sort of New York Open. This is this volatile, or sorry, should I say this volatility and this increase in volume that you see marked in with this red box. So what we're going to do is we're going to sort of ignore this and we're going to sort of, because as you know, most news events after an economic event takes place, you always see the market correct itself. For example, you saw when that news was building up, we saw price sort of retrace down towards our moving averages, and then we saw a big bullish move when the NFP dropped, and as you can see, price then came back down. In conclusion, the market ended up correcting itself as it normally does. So with that being said, we're sort of going to ignore this information as it is irrelevant to us, as it is a economic news event, and the market always will correct itself. So what happens is we had a consolidation. Again, we're just going to sort of ignore this move, this up and down move here. We're just going to count this and this, and then we're going to keep going. So as you can see, we sort of saw price consolidate. If I go ahead and show you on the higher time frames in just a second, price did continue to consolidate between the two main areas. So this is what's happened for gold. So obviously we've had a consolidation after where we last left off on the Friday. We had the New York session kick in on some increased volume. After the market reset itself back to down to around 2913, we saw a big impulse, a big bullish impulse from gold, with price nearing towards the 2930 area. We have a point of interest just up there where it failed to reach, and then price sort of came back down, testing on our 200 before having a break of structure. If I go ahead and mark these things that I'm talking about, so break of structure is here really. You can see that after that price just sort of came down. We came down to our 2905 level and tested it as a support. This area here, give me 1 second, this area right here, saw price come down to this area. Volume of the candlesticks slowed down towards the end of the day, and then obviously market closed around this area here. And then since market opened today, and so market opens at 10 p.m. GMT on our Sunday. That's for us UK traders. That's sort of the time we expect it. So 10 p.m. on Sunday is when the market opens back up. 10 p.m. Friday is when the market closes. And then yeah, as you can see, as of today, for example, leading into the London session, we've had a big bearish retracement with price now testing the shallow numbers of around 2900. So with that being said, what we're going to go ahead and do is we're going to go back to our hour one and just go over this consolidation block. So if I go ahead and grab a path and just sort of drag it from where we last came into this consolidation range, as you can see, we actually do have a rough median top and bottom for this area, with the absolute bottom being around 2898 and the absolute top of around 2925. So price is still consolidating between these areas, and as you can see, we are coming to the support. If I go ahead and grab a rectangle real quick and sort of just drag that over here, as you can see, we are creating many points of liquidation, and obviously if price does go ahead and sweep that liquidation, we could in turn see a bullish move. However, if price sort of suffices and continues to respect these supports, we will most likely see price continue back up. So as of right now, you can see that the rejection is significant. If I go to a minute 5 real quick, you can see that we are now rejecting off of that area that we just marked in, going back to our hour. So what we could expect is sort of price to push back up to our 2925 area. Basically what we're looking for this week is a change in trend. So as you can see, we had a big bullish uptrend, and if I go to the hour 4, we are still in an uptrend very much. Same with the daily, same with the weekly. We are in an uptrend. As you can see, we haven't broken trend on the higher time frames, so this is just all sort of noise on the lower time frames, but obviously noise is what we like. We like consolidation times like this. I understand that from our swing channel this week we actually did take a few trades, quite a few trades sort of below this POI. We'd find price come back into this area. Once we see price come back in, follow itself back inside. So for example, if I go to a minute 5 real quick and just sort of zoom back, for example, like this drop here, which we were just talking about right here, this sort of move, if I go ahead and just grab this sort of move here. So what we'd see is obviously this is that bottom support that around that 2903 level. And what we'd potentially be looking for is sort of price to come back. We see price significantly break through the bottom of it, and then price come back into it. Once we see price come back into it, that's when we want to enter our trade. And obviously, if you can see now, if I go ahead and scroll forward, as you can see, so that's where we sort of take our trade, and we set our stop loss sort of just below the last wick of that bearish push, and then easily just target the level of around 2925. And I believe we took that position sort of many times in our swing channel, and the same sort of position for short. So when you see price sort of come up to test that 2925 area, and then price sort of comes back into that level after trying to push out of it. So when you take your trade, you set your stop loss, and then you target the bottom side. Obviously, as you can see, the sell side, the short options were a lot greater than the long options. As you can see, the risk to reward on this single trade is the 9.62. So it's a great risk to reward, great trade as well. Very minimal drawdown. So what you'd see is, like, for example, in a live market, you'd see sort of if I go ahead and just sort of grab a paintbrush, you'd see the price comes back into this area here. So like you're watching price, okay, we're seeing price come back into this area of around 2925. You see price trying to break out of it, and then you see price come back down. What you probably would do in a live market situation is you would probably base your trade off of this pullback. So you see 2925 trying to be broken, we see price trying to break out of that top side. Once we see price come back down, you'd sort of probably enter around here, set your stop loss above our points of interest and above the previous wick after that push out, and then just simply target that bottom level of support. There is other levels that you can target. If I go ahead and just reset price scale real quick, there is other levels you can target. For example, we have a point of interest here which actually rests on our 200 moving average. You could even in fact target just the 50 moving average. If I go ahead and just scroll back and see what that looks like on the minute 5, you can see actually. So obviously when you're watching this trade, and this will all be inside our course that we are releasing at some point soon. We also have a small confluence here. If I go ahead and just grab an eclipse real quick, you have a confluence here, which is the 50 and 200 cross, and the cross is with the 50 going through and going on the going to the bottom side of the 200. So indicating to us that once we see sort of this initial move happen, we see that cross signifying to us that we can see price continue. So like even if you was to just target your next point of interest here, you're looking at a 5 risk to reward. You could even target the absolute bottom of around 2898 and grab a 7.55 risk to reward. You could even potentially weighted out your entry, seen as the next push, and then second you see that bearish candlestick close and this next one open, you take it from there and set your stop loss there, giving you a 12.8 risk to reward. So with that being said, as of right now, we are currently testing on that support, and as you can see, significantly we are actually pushing down. We've had a big bearish candlestick indicating to us that we are seeing a bearish engulfing pattern form here with our A, B and C candlestick forming now, and as you can see, price is actually breaking through the bottom of it. As you can see, we have had this happen multiple times. We could just sort of see this retracement take place, and then price sort of suck itself back up, closing the candlestick with a decent bit of liquidation. Or obviously there is a bit of liquidation here. As you can see, if I just mark this in a little bit less thickness, so we have liquidation. So what we could potentially see is price sort of sweep that liquidity and then continue on up. So basically what we're looking for this week is either a break of structure through this bottom side. So if we see sort of candlesticks close between this area here, if I go ahead and mark this in, because it's actually a point of interest we want to take into account, and just sort of mark it in there. So as you can see, that is sort of the absolute bottom, which is around 2891. There's a lot of things for this to happen. Obviously we need this continuation of this bearish momentum. We also need this 200 moving average to be broken through, and then obviously this liquidation to be swept. This liquidation being swept, this here. If we see the liquidation being swept, we could just see price come to around this area here, and then pull back up, just giving gold the bullish momentum that it actually needs. So that's what we're going to sort of be looking at. We're going to be looking at whether one of these two levels here, if I go ahead and just mark these in, so we're looking at that level or that level. If we can see a breaker structure of either of those two levels, the most likely thing is, so for example, if we see a breaker structure through this top side, we most likely will see a continuation. If we see a breaker structure on the bottom side, we most likely will see a continuation to the downside, back into the sort of mid 2,800 area. So yeah, with that all being said, that's sort of what we're looking at as traders this week. We're just waiting for that breaker of structure, and then obviously on Wednesday we have our write-up technical analysis, where we will go over what has happened since our start of week technical analysis, and sort of touch up and re-perfect our technical analysis, and see sort of, okay, because by the time Wednesday comes, we could potentially see price breaking out that top or bottom side, and then creating a new sort of pattern or a new sort of trend on the lower time frames. But yeah, remember, higher time frames. If I go ahead and just remove these drawings for you real quick, just so it doesn't create too much noise. Higher time frames, we're in an uptrend. Have been for a long while now. Even this, you think this is a breaker structure, it's not. We are in an uptrend indefinitely, and have been for a long while. Obviously, with the last sort of major downtrend we had was 2022, but since the end of that year, we have seen a strong bullish uptrend for gold. So remember, trading trend, we are in a uptrend. We're just looking for those possible opportunities where we see price break through major points of structure. Obviously, as you can see, we also have a trend line marked, and I believe this is a hour 4 trend line. Yeah, an hour 4 trend line dragging it into the future. So there's still stuff that can hold price up, but again, that's what we're going to be looking for this week, and as of today, tomorrow, however long it takes for either side to get broken out, because remember, one of these sides will be broken out, and then that will change the direction for gold. Yeah, so but with that being said, that is our start of week technical analysis. I hope you've all enjoyed, and I will catch you in the next one. Peace.